This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hi everyone, I know we're all hurting right now. Crypto has taken a beating, and Goldman Sachs says flatlining is the best case for stock-heavy portfolios. Flatlining? Zero returns? Sheesh. In situations like these, we can take a cue from the world's best investors, because a groundbreaking Ernst & Young study last year revealed that 8 in 10 ultra-high net worth individuals invest in alternatives. However, Bank of America's CIO recommends investing in one specific high-performing alternative to rescue your cash. He's talking about fine art. 2/3 of millionaires already hedge against inflation with art, according to UBS, because the last time inflation was this high, art appreciated by an unprecedented 33.2% annually. Now, obviously, most folks don't exactly have tens of millions lying around to start buying Banksies and Basquiats, but that's where Masterworks comes in. They're helping people keep their cash intact by offering fractional investments in the top 1% of the art world. And with a recession on the horizon, they've seen sign-ups increase by 320%. That, combined with the fact that they speak to every investor to make sure art is right for them. That means there's a wait list, but I'm hooking you guys up with priority access to skip the line, and it's as easy as going to masterworks.com and using promo code CryptoConversation. That's masterworks.com, promo code CryptoConversation, and you can see important Regulation A disclosures at masterworks.com/CD. Again, that's masterworks.com, and use the promo code CryptoConversation to skip the line. And now, folks, it is on with the show. My guest today is Jason Cozens. Jason is the founder and CEO at Glint. We're going to learn all about Glint today. To me, it looks a little bit like a kind of an onboarding platform. It's a platform, it's an app, it's a whole bunch of things, but it's all about the wonderful world of gold. Gold, yes, the original hard money, precious metal, gold, the good stuff. Welcome to the show, Jason. Hello.
Hi, Andy. It's great to be invited. Thank you very much.
Great to have you here, Jason. We'll do what we do at the beginning of the show, which is I'll invite you to please introduce yourself. Love to hear just a little bit about your backstory, who you are, where you're from, and I suppose, what was your kind of your introduction story to gold, if you like?
Yeah, sure. Well, for somebody who's disrupting financial services, I'm actually from, I'm not from the financial services industry, which I think is probably a good thing. But I think disruption often needs a totally new perspective. My background was that I had studied architecture, and I'm not talking about software engineering, I mean, architecture of real buildings. And this is before the internet was emerging. I was studying architecture. I worked in Hong Kong for a couple of years. I came across my first computer, which just blew my mind as I did my first computer-generated visualization on it. And I realized at that point, wow, computers are going to completely change the way in which we communicate. And that's where I kind of threw my energies. After that, I turned my back on the building of physical architecture and started on the virtual. And my first company, Visuality, was developing VR solutions. The first time it was cool back in the early 90s. So, I was helping people with visualizations inside, in nuclear power stations when using robotics to work in hazardous environments. So I visualized the Sydney Olympic Stadium before it was built for the world to see, or Wembley. And when the Queen's St. George's Chapel burnt down, I showed the world and the architects and engineers what this fabulous vaulted ceiling had looked like. And then, of course, the internet started to emerge, and a lot of my customers wanted their visualizations online. And at the time, there were no off-the-shelf software systems to do anything. There was no WordPress, or there was no e-commerce systems such as WooCommerce or Magento. So I had to hire teams of engineers, and we designed and we built the back-end systems for the kind of emerging e-commerce landscape. And I did that for a lot of the high street retailers in the UK. people like JD Sports, for instance, and later for Watches of Switzerland, etc. And actually, it's quite similar to architecture. In fact, the phrases and the words we have in architecture translate directly into software engineering and digital product development. So, usability and design and engineering are words that are used across both disciplines. And I'd hire an architect any day who wanted to come and work at Glint, because I think it's a really interesting kind of education for this digital ecosystem. So there I was in that world of digital product development, and 2008 hit. I mean, do you remember that, Andy?
Absolutely.
Yeah. Yeah, I mean, for those of you who are too young to kind of be cognizant of it, I mean, it feels crazy that I'm even saying that. It just feels like yesterday to me. The world came to the brink of total financial collapse. The systems that run our financial systems completely stopped. Well, we're just hours away from stopping. A lot of them had broken down. The banking institutions behind them weren't trusting each other. And a lot of people were losing money, and yes, banks went bust, And that was the first time, Andy, that I realized that a bank is not a risk-free deposit of funds. And the first time that I think many realized that when you put your money in the bank, it ceases to be yours. It's owned by the bank. It becomes their liability to you. You don't owe it anymore. It's not a safe deposit. And I thought, gosh, I was thinking every day about how do I make things better, faster, do it different ways. And so I applied that to the problem at hand, which is, how do I store my wealth without putting it at risk? And that's when I learned about gold. And of course, once I learned about gold, I also had my attention pushed to the depreciating purchasing power, the depreciation of the purchasing power of money. And why is it that, a burger in 1970 when I was born used to cost 55 cents. And then, as I was going through these problems, it cost about $3.50 in LA. It's, $10. And now probably it's another $15. It's probably $15. Why is it that money becomes worth less? And of course, I learned that it's because, we came off the gold standard in 1970. And since then, central banks and their governments have ordered the printing of huge amounts of money into the money, increasing the money supply to ridiculous levels. And so I thought, well, how do we protect ourselves from the tyranny of those central banks and from that, that destruction of our purchasing power, which is totally out of our control? Again, it came back to gold, but of course, gold is without doubt, I think, its purchasing power over time, thousands of years, has proven it doesn't just buy you what it did in 1970; it buys you what it did 3,000 years ago. I think I realized how wonderful it was. Well, just before I go into that, the problem, of course, is that you couldn't use it to buy things in electronic payments. You couldn't pop down to your supermarket and pay for something. And it's something that, for instance, a lot of people in the cryptocurrency world say, oh, we're trying to solve this problem. You can't spend it. And I thought, well, why not? Why can't you enable physical allocated gold that you own to participate in electronic payments? And I thought, I'm sure I can solve that. And that's what we set out to do. And that's what we've done. But at some point, we need to come back to gold's nature, because I think it's incredible, really.
All right. Well, yeah, fascinating stuff, Jason. And you kind of hit the nail on the head a little bit, because I was thinking the same thing as you were talking. It's so interesting that, you come from effectively a technology background, right? Well, near enough to a technology background. You're obviously a smart guy, early to computers, but yeah, you're. I guess it'd be good just to hear your version, I guess, if you like, then, as to why you're convinced that that gold is the way forward in an increasingly digital world. Is there a place for Bitcoin or something like that in that world as well? Obviously, Bitcoin is designed to be kind of like a digital version of gold. That's one way of understanding it.
Yeah, I mean, I think one of the things that I in '08, it became really apparent to me, is that anything or the nature of which is defined by human beings is subject to corruption, and sometimes with the best intention. In other words, it can be changed. And, that's the problem with a lot of these things. I mean, I'm terrified of central banking digital currencies, for instance, but I'm sure the people who are involved in setting them up have the best intentions, but they will be changed, and they will be changed for the worse. And of course, fiat currency itself, it was supposed to be originally a letter of ownership, a certificate of ownership of how much gold you owned in the bank. And up until 1970, even central banks could convert their dollars for gold. But of course, it changed because human beings, that's what they do. Anything whose nature is defined by those human beings can change. And so I love gold because, I mean, and why it's stood the test of time is because it's not created by human beings. It's created when two neutron stars collide. It's immutable. What a beautiful word. It's a word that
but again, not to I don't want to be the
defines it really
crypto
well.
guy.
It can't be changed.
I don't want to be the crypto guy trying to argue
Be
with
the
you, Jason,
crypto guy. Go on.
Isn't that's what Bitcoin is designed to be as well? Bitcoin is just computer code. It's effectively it can't be changed. It's out of the hands of humans now. There'll only ever be 21 million of them. The blockchain is immutable. It can't be changed. And that is kind of, I know these are properties of gold as well, but it just surprises me sometimes
I think
when, gold, people that are really into gold or really into Bitcoin, they don't necessarily see the same in the other when there's so many similarities to me.
Well, I haven't commented yet on cryptocurrencies.
Sure.
So don't put words in my mouth. But
Absolutely.
I think what's important to see is, and because I think that some of the things I'm talking about come to the root of some of the differences between gold and cryptocurrencies. And I think it's really important that we acknowledge the strengths and the weaknesses of both. And what I'm really kind of fed up with really is this discussion that you should, for instance, drop gold, buy Bitcoin. I mean, I think it's just it's a kind of it's a message that's pushed by those kind of snake oil salesmen trying to pitch something without talking sensibly about the pros and cons of things. And of course there's pros and cons of everything, but let's just understand gold first before we start talking about anything else. It is when I say ultimate, it is being proven. It's the ultimate store of value. There's nothing on this planet in civilization that we can point to that stood that length of test of time, that can't be changed. It's trusted globally for a reason, by different civilizations, by different people across the planet. Central banks still use it as a foundation for their country's wealth. And you see what's going on in Russia and China in this kind of financial war that's going on between the West and the East. They're not using Bitcoin or cryptocurrencies, they're using gold. There's, so and to say that Bitcoin, for instance, is gold 2.0, I think is ridiculous. It has some of the qualities, and they're trying to mimic some of the qualities of gold, but it cannot be and never will be gold 2.0. What are we trying to do though? What is Glint trying to do? What is the crypto community trying to do? We want a store of value that doesn't depreciate, don't we? We want one that's free from that tyranny of central banks, where our purchasing power is maintained over time. That's what we want. I think we do, even if it might not be happening, I think we do want a situation where we have a fairer society. Glint is all about giving everyone an equal opportunity to prosper. That's our vision as a business, and we think we're doing that by delivering a reliable form of money to the world. But it's obvious that the fiat currency system is at the root of all of the huge gap between the haves and the have-nots. It's not. It doesn't need. You don't need to be a genius. You don't even need to understand that. Why it's happening. But the fact that 5 people or more in the US than the bottom 50% is plainly wrong. And why is that happening? A lot of people blame it on capitalism. I'm a bit of a libertarian, so I kind of take root kind of stock at that, and I think, hang on, it's not capitalism, it's the blood on which capitalism runs, which is the problem, and that is the money. The money is created by central banks. It is given to people, but not equally. I mean, we got a little bit of that during COVID, but generally speaking, it's given to banks. Who do banks give it to? And I'm talking generically and very simply here to get the points across. We don't want to go into the nuances of how money is created, because that's all part of the way in which they try and confuse everybody. But effectively, money printing is then distributed by banks, who to people like me, I got to admit, who have money, who can get more of it. I mean, over the last 10 years, you've been able to get money for free just about if you have money. Interest rates have been so low. But if you really need it, the bank isn't going to lend it to you. And of course, that's why the haves get richer and richer, as they take this free money and they buy assets. So we're trying to protect ourselves from this. We don't want to have this growing gap between the haves and the have-nots. We want to be free from the tyranny of central banks and the way in which our money is depreciated over time. And we don't really want, and another thing we don't want is money to be used as control. I mean, governments are obviously very good at trying to use that as a weapon. I mean, are there any other things I've missed, do you think?
Well, those, I mean, you've painted a pretty good case for why gold is an important store of value, Jason, and you've identified some of the big picture problems with the world. I think it'd be useful then if you explained a little bit about Glint itself and what Glint is. What is the purpose of Glint? Who is the target audience, and yeah, what is Glint?
Yeah, so Glint has enabled, is the first company in the world to have enabled physical gold, allocated gold that you own, to be used as money in electronic payments. And we do that with our app and with our integration with Mastercard. So we're building a system, a kind of financial services ecosystem that's based on gold, that's both integrated with the existing financial system and independent of it. So through our app, you can buy gold, and you can buy as little as 1 penny's worth. So there's a level of democratization there. You can sell gold. You can save it, of course, which is what it's supposed to be. And you can send it to your friends in payment in lieu of services or as gifts, and you can receive it. And you can spend it with the Glint Mastercard in the kind of what I call traditional financial system, anywhere in the world where Mastercard's accepted. And so, we've made it money in digital and electronic payments. And who are our customers? They're 18 years old. I think our oldest is nearly 90. There are people definitely who have some money, because a lot of the world, unfortunately, is living purely off credit. So in order to be buying the gold, you tend to have some savings, even if it's a small amount. So we range from people who have $50 in their accounts, people who have millions of dollars in their accounts. And our target audience, as I said, tends to be more, they tend to contrarian, I'd say affluent, because there's a strong product market fit with the affluent, because if you've got money, you're worried about losing it. But as I said, we have other people as well who are at the beginning of their journey of wealth creation. And we unfortunately have a bias towards men. I think we have about 60 or 70% men, and I think it's about 30 or 40% women. I'd like that gap to be changed. And we're live, and I think our app can be downloaded in about 200 countries, but the card can be issued at the moment in the US, across the US, in the UK. We have 140,000 customers. We were live in Europe until Brexit, but we'll be back live again in Europe towards the end of this year, and we're looking to expand into other regions around the world.
Fantastic. Well, so talk us through a little bit about how it actually works then, Jason. So if people do they bring their gold to you, or are they buying gold from you and then you're storing it somewhere on their behalf? So how do those gold transactions take place, and where is the gold?
Sure. Yeah. Well, you deposit once you're onboarded, and we have to. We're fully regulated in all the regions that we're working in. So you have to go through your regulation. We have to do our KYC, anti-money laundering checks, etc. And then you deposit funds into your account. Fiat currency funds, unless somebody wants to send you some gold to start you off, of course, which also could happen. But the majority of people are buying gold with their fiat currency. They can actually spend their fiat currency with their card, and they can also send their fiat currency to other people using the peer-to-peer system. But they're buying the gold with fiat currency. They're buying a piece of a physical gold bar that's in Switzerland in a vault run by Brinks. Brinks are the world's one of the world's biggest custodians of precious metals. So you can't get you couldn't really get much of a better custodian of your metal. It's insured. They insure it by Lloyds of London as well. And that's a real bar that they have legal ownership with. And Andy, this is really important because there's so many people out there who are buying what I call, they're buying either the gold that they don't really own. So, for instance, ETFs, there's a big world out there of ETFs. It kind of did revolutionize the gold market back in the 90s, I think. But the problem is you're buying a share in a fund that may or may not be backed by gold. You're not buying gold with an ETF. And also unallocated gold. And, a lot of people are buying gold. And then when you dig down into the terms and conditions, you find out that it's what's called unallocated, which means that the supplier of that can lend your gold out if they want to. Again, you haven't got full ownership of that gold if it's been lent out to people. And when the music stops, where's the gold? So, and that's a problem. A lot of platforms out there are run by companies that have unallocated gold, and worse still, in vaults which are often owned by governments as well, which is something which is not really what most of our customers want. And anyway, when a transaction comes through, it comes through Mastercard, it comes to Glint, and it says, "Look, is Andy good for this transaction? He's paying. What's he paying with? He's paying with his gold. Okay, what's the exchange rate from between gold and the currency of the invoice? In this case, it might be dollars or pounds or euros or yen." We work out how much gold the customer's got and whether they have enough to pay for the transaction when the exchange happens. We authorize the transaction. We then sell just enough gold to cover that transaction, exactly the right amount of gold. We either do that to other people in our system who are selling at the same time, or buying at the same time, should I say, or we offset it to our liquidity provider. And all this can happen within milliseconds. We have a service level agreement with Mastercard that says it needs to happen in milliseconds. It's running on a centralized database, not a distributed one, because the gold at the end of the day is in a centralized location. We don't see any reason for having that distribution, and we don't see any reason of having the expense or the inefficiency caused by having a distributed ledger. So it's very, very fast. As I said, things happens in milliseconds, and we don't have very expensive fees. I mean, a transaction to do peer-to-peer transfer is free, and a transaction to buy and exchange gold is only 0.5%, and the storage cost for the year is only 0.02% per month. So it's very low.
Brilliant.
But
okay, well, and you said earlier, Jason, that you'd be happy to talk a little bit about cryptocurrencies and your thoughts.
Yeah.
Perhaps as a way to do that. I had a look at your Twitter account, and so this is, I don't know, maybe this is from a month or two ago, but I saw Mr. Edward Snowden. You'll be familiar with Mr. Snowden.
I am.
And Mr. Snowden, in recent times, has become a Bitcoin supporter for reasons that are known only to him. But he was tweeting something about Bitcoin, and I saw that you said something like, "Ed Snowden says that Bitcoin is gold you can send over the internet. More misinformation. This is ignorance. The ignorance is what the gold industry is up against. Spread the word. Gold is now everyday money with Glint. Bitcoin is lots of interesting things, but it's not gold 2.0. So that's what you said. So yeah. I don't know. Maybe what's your problem with Mr. Snowden and Bitcoin there?
I don't have a problem with Bitcoin. Let's get that really clear. I think it's a really interesting asset. It's a really potentially a really interesting currency, and I think that, but it's just very different to gold. And I think the idea that gold cannot be used in electronic payments is the misinformation that is being put out there by some people within the cryptocurrency world who feel that they need to give gold a bash in order to kind of make progress. And it's like, hey guys, we're both on the same side philosophically. So let's just work together rather than giving gold a bash, because it doesn't need to be. And it's just misinformation when people put out there that, you know, gold cannot be used in electronic payments. And it's one of the reasons why people say, you know, sell gold, buy cryptocurrency. Let's get on the same line together. We're both fighting a much bigger problem. And that is what the things we described earlier before. You know, it's been proven that at the moment, Bitcoin and other cryptocurrencies are what I call risk on, and that gold is risk off. When Russia invaded Ukraine, cryptocurrencies like the stock market tanked, and momentarily gold shot up because it is still seen as that currency of last resort. It is seen as that it has got that reliability that's never lost. And I think Bitcoin and cryptocurrencies have still got a long journey in getting towards being a reliable store of value or a form of money. I know people talk about, I was listening to one of your other commentators on your show, and you were talking about how, you know, the fact that cryptocurrency is going up so much, and, you know, gold hadn't gone up much. You don't want a currency to be, you know, going up and being volatile and going up in price so much, because how do you price your goods? You know, one minute they cost this much, the next minute you have to change how much they're worth in Bitcoin. I think Bitcoin is at very early stages of its development, you know, when you think about this in a big picture. And yeah, that's all part of the narrative as well that we all understand with cryptocurrency, is that you stay with it, you go through the bull and the bear markets, because eventually it will reach some level of maturity, and the volatility will decrease. Well, yes, it will. And at that point, though, it will cease to be a risk on asset. At the moment, I think people, especially the have-nots, are so hungry for something, for a way to be able to, you know, change the imbalance that they've done a lot of investment into cryptocurrencies because it's the kind of get rich quick kind of mentality. But at the end of the day, you just need cryptocurrencies to gain more mass adoption, and eventually they might move from a risk on to a risk off place. But right now they're not, and gold is the only thing out there that is independent of all banking systems. It's the only thing out there that's trusted globally. It's the only thing that stood the test of time, and it still can be, work in electronic payments. Look, I mean, gold's not as volatile as cryptocurrencies. It's with Glint, the transaction fees are low. In terms of hacking, we've seen some terrible situations with things like NT-GOX, where all the cryptocurrency gets hacked, and you can see it going off into the distance, and people lose hundreds of millions of dollars worth of crypto because the exchange at the end of the day is centralized. These things can happen. If look at Glint, the gold's in a vault. It can't, they can't digitally. You haven't yet come up with a way to dematerialize the gold and send it across the internet to someone's criminal's lair deep underground somewhere in the world where they're hiding. That's not going to happen. And then the concentration of cryptocurrencies is obviously with those enlightened ones within the cryptocurrency of buying lots of cryptocurrency, but you have the same. You have the situation where, I mean, and I can be, whether it's 2% or 3%, but you have a low percentage of people owning a very large amount of the cryptocurrencies, and a lot of the statistics and the systems out there show that. And again, in a way, I feel the problem is that you're replacing one set of oligarchs with another, which isn't great. And there's scalability issues to solve, and there's energy issues to solve. So let's be real. It's not gold. It's and it's defined by human beings, so its nature can be changed. If enough miners vote, they can change it. Enough people in the system vote to change its nature, they can do, and they're doing that within the cryptocurrency industry all the time. New technologies coming out, ways to make it faster. And as I say, change can be often a good thing, often perceived to be a good thing at the beginning. But that can lead to a corruption effectively of the initial idea and concept, which can lead to problems down the line. That's what the difference between gold is immutable. It can't be changed. Really can't. It's like great when neutron stars collide. So it's never, and that's why it stood the test of time. But I think one of the reasons people like the idea of cryptocurrencies originally was this idea that somehow it could be free from government control. And actually, I did have some hope myself that that might be the case. That, that we could do with a system of money which is totally free from government control, and maybe still one day we can. But unfortunately, I see the regulatory specter of central banks and governments coming down on the world, and I don't have a lot of confidence about the future around that. Again, I mean, most people have I'd say most people in cryptocurrency do so through centralized exchanges for a start. That's easy target for governments, as Glint would be. I'm not, that's one of the disadvantages we have. We don't, we're a centralized place. The gold's in a centralized location. Yes, in theory, if governments wanted to, they could stop their residents buying it. But I think the same could happen with cryptocurrencies. And I think there still needs to be more innovation in the area to be able to stop that. I think that's probably the biggest potential benefit of a cryptocurrency, but I just don't think the right one's there yet.
Sure. Well, I mean, you make a lot of good points, Jason, and there's a few pushbacks I could do, but
Please.
really.
Please do.
Well,
I'm an open book and I'm an open mind. I try and look at this in a very pragmatic way. I don't believe that I have all the answers. I'm not that arrogant. I think, I have my points of view the way they are at the moment. I'm very happy to listen to other people's.
Sure. Well, look, I'm not interested in getting too deep into a Bitcoin versus gold argument. It's not what it's about, because as you said, we are really on the same team. I guess one of the observations I'd make though, Jason, is it just kind of strikes me in that you're right in that crypto and Bitcoin is very new and unproven. It's unproven at scale. Because Bitcoin is seen as, a kind of a boomer coin already, and Bitcoin itself has only been around for, 12 or 13 years. Everything else in crypto is very, very new and very, very volatile and untested, whereas gold has been around for centuries and centuries and centuries across all different kinds of civilization and is proven. So that is not in doubt, but it's demographics, if you like, or it's even just branding. You understand branding, Jason. Gold has a brand problem, right? Because for the kind of if you're a young person today, given the cards are a little bit stacked against you in terms of, where do you put your money? You've got to try and make some savings. You're fighting against inflation. Any little money that you have to invest, do you put it into property? Do you put it into the stock market, crypto? Gold is just, it's a hard one from a kind of investment perspective for those people that don't already have money. I get that, as you've said, if you've got a lot of money, maybe gold makes a bit more sense from a kind of a hedge or a store of value. But how do you take your message to, I guess, the younger generation or new people? And how do we make gold sexy again, Jason?
Well, I think you hit the nail on the head with the word investment. I've banned the word investment in our company. Gold is not an investment. Gold is a store of value. It is just money. Unfortunately, the narrative that the world has been educated with over the last 50 years since we came off the gold standard. I mean, it wasn't that long ago. I mean, it came off the gold standard when I was born. I don't feel that old. Yeah. It is money. An investment is something, I might say, okay, I want to invest in your company run by people. That's an investment. I want to invest in businesses. That's what the stock market's all about. And that at the moment, because cryptocurrencies are kind of growing so fast, and as they scale up into their maturity, it's definitely an investment. And that's why it has this risk on nature. Gold. See, I mixed the two up. Money, gold, it's the same thing. It's just money. You don't want money to be a risk. You don't want it to be something that can disappear, go to nothing. You just want it to be a store of value. So how do we use this thing? Well, you have your money, which you might want to invest in things. I can invest my gold into a business. I can use my Mastercard, or if the company wants to accept gold, I can make an investment into that. I mean, some of the the incumbent financial service people have said to me, "Oh, but the problem with gold is it doesn't give a yield." Of course, it doesn't give a yield. Pounds don't give a yield if you put them under your bed or store them in a vault. But if you risk them by giving them to somebody else to do something about it, you'll get a yield. Yes, but you can, and there's plenty of people starting to develop yield-based gold products, pure gold. Keith Weiner and stuff are doing things like that. It's just money. So going back to the younger people, I don't know what the solution is for them, because unfortunately I feel that it's going to need some kind of revolution, and I hope it's not a violent one, in order to get a more fair society. I hope that what we're doing and what the cryptocurrency movement are doing can help, make the transition to a fairer world a bit smoother. But what I would say to anybody looking to, and I can't give financial advice, of course, but my opinion is that you've got money in different pots. If you have money you want to invest, then invest it in speculative ventures. But if you have money that you want to keep, that you want to save, and you don't want it to be put at risk, that's when you want a reliable form of money. That's why I think gold has a great place. Of course, at some point you want to spend it. So it depends on your time horizons, of course, as well, how you're going to use that. But if you want to save it, the one example, I met American girl and her mother when I was in Paris. They were on vacation, and we were sat at this kind of French family style table where everyone sat at the same table eating. I got chatting to them, and this girl said, "Oh yeah, I haven't got a house, and I'll never be able to buy a house, and I've just given up on the idea." And the mother said, "Yeah, I mean, it's just ridiculous. I've told her just forget about it." And I thought that's so sad. From our parents' generation or her grandparents, everybody had a home. A lot of, gross oversimplification. A lot of the middle class had houses. A lot of people could buy homes, and now that's becoming increasingly a difficult prospect for young people. Well, do your speculative things, work on the stock market. You've never been more empowered than you are today, but be careful. That is speculative. It can go to zero. Whereas when you want to put some of that away for, saving up maybe for 10 years, put some of it into gold. I mean, gold still outperforms various parts of the stock market over the long term anyway, and you're not putting in, it's not like you're investing in risky businesses. And then in 10 years' time, you actually might have enough for a deposit to put down in a house. Whereas if you save that in pounds or dollars or euros or yen, you wouldn't be, because by the time it came, that money would have depreciated so fast. And right now, oh my God, we've got a tsunami of inflation going around the world. We're not over with that. In the UK, they're talking about 18. The alerts came out yesterday. People are talking about 18% inflation next year. And then people say, but in dollars, gold hasn't done too well. It's like, oh, hang on. In most currencies, pounds, euros, yen, gold is doing really well. But actually, look at it the other way around. Gold is still the same as it always was. It's the confidence in those fiat currencies that's dropped. And when these changes that we're going through started a few months ago, there was a flight to two places, US dollar and gold. So of course, in US dollars, gold doesn't look like it's changed much. It's just about the same over the year. But gold always outruns the dollar in the long run. So, it's just a temporary aberration.
Yeah, it's just about having that long-term time horizon. All right. Well, hey, look, this has been fun, Jason. I have enjoyed talking to you, and I can tell that you actually know a fair bit about Bitcoin and crypto as well, which is refreshing to see. So I guess nothing else to say.
Yeah, I mean, just one more thing. I mean, as I keep saying, we're friends with the cryptocurrency movement. We're both got the same problem. We're building a bridge to the cryptocurrency ecosystem so that you will be able to buy physical allocated gold, a Glint, and go backwards and forwards between the two different worlds. So definitely look forward to having that done and having a good relationship with between the two communities.
Fantastic. Well, close it out, Jason, by making the case for why people should use Glint, and if they would like to do so, what is the easiest path forward? What should they do? Where should they go?
Yeah. Okay. Listen, if you're trying to defend yourself against inflation or systemic risk, if you want something that stood the test of time but still has the technology to enable it to be used in electronic payments, then download the app. It's available at your favorite app store. It's easy to get onboarded. For most people, it just takes a few minutes, and just try it out. You can buy gold for as little as $1 or 1 cent worth of gold, and get going with it. Try and put yourself on your own personal gold standard.
I love it. Fantastic. All right. Hey, that was brilliant. Thanks very much, Jason. All the best, and bye for now.
Thank you, Andy.
All right. There you go. That was Jason from Glint. Yeah. What do you think of Jason? Fascinating character, I thought. Yeah. Obviously very, very smart guy. Very passionate about gold. I meant to ask him if he was, what his views are on Peter Schiff. Is that how you say it? Peter Schiff. Is he the UK version of Peter Schiff? I don't know. Had a twinkle in his eye at times, as Peter does as well. But certainly, obviously, you can't really go wrong with gold. Gold is gold. It is a store of value. But yeah, it's just... I can understand why a lot of people look at gold and they just can't get excited about gold when they've seen what Bitcoin has done over the last 10 years, while gold has, gone a little bit up and a little bit down and a little bit up. But as Jason says, that's what it's supposed to do. It's supposed to stay steady, store of value. Anyway, check it out. If you like the sound of Glint, glintpay.com. is the website. Thank you to Jason. Thank you for you, the listeners, for listening. This was today's show. Thanks, team. This was the Crypto Conversation for Brave